Hi, this is Larry Gaines from Options on the Open. In this video, I'm going to show you an analysis of the current broad market using the S&P 500, and I'm going to lay out an analysis to show you where the market is within a cycle and where it potentially is headed. So this is going to be a very good analysis, which I'll take you through in just a second. But if you've not already gotten my free ebook, just take a minute to go to my website, optionsontheopen.com, and on the home page you'll see download your free ebook, Make Money Trading Options, Top 15 Option Trading Strategies. So it's a really great ebook showing some various strategies that are really great that I use a lot for all my trading. And just put your name and email address, click, and it will come right to you. So let's get started. Now, first off, forget everything that you hear on the news services, radio, newspapers, CNBC. Just clear your mind and look at this straight analysis. So we're just going to use historical data. We're going to use the cycle model that we use at Options on the Open, and we're going to use Fibonacci. And we're just going to take a serious analysis of the current market just using data. And I'm going to lay out to you the high probability scenario for the market moving forward. So first off, just take a SPY, which is the ETF for the S&P 500, and you can go back as many years as you want, but I went back to 2004, and the markets you tend to hear sell in May and go away. Well, just wanted to lay out some a picture to graphically show you that a lot of times that is the case. So this green arrow here is showing you a low in 04, and this came in August of 04. So here's a low here, August 04. Here's 2005. Here's this low is in July 2000. Okay, 2005. This is 2006, July. Here's this low. Here's 2007. The low came in August. Here's 2008. The low came in July. Here's 2009. You had a low in July. Here's 2010. Low in July. Here's 2011. Low in August. And then that prior low, that next low in October. So just taking this, you can see that you do have markets tend to sell off, tend to go down into the summer months. Summer month, all these arrows are lows that were made in the summer months of either July or August. So that's case one. The second part of this analysis involves using the power cycle model. And this is a price cycle model that I developed for all of our trading at Options on the Open. And it's highly accurate and it's patent pending. But so the model, our model right here, the long-term market trend turned down right here the week of May the 5th. And this model, once there's a long-term trend either up or down, the trend tends to last on average 4 to 5 months. So that being said, you know, having it started in May, the first week in May, the trend tends to last 4 to 5 months, so that would put the trend bottoming out or changing or cycling, flattening out sometime in either September, sometime in September. So we have June, July, August, September, May, June, July, August, either August or September. So that's case two. So right now we're just into May. So this cycle, based on a long-term cycle over the average of this cycle model, they tend to last 4 to 5 months on average. So that's another case to look at. And the trend just to the long term started down. So then the third case or step that I want to go through is, okay, now that we know that we're in a long term or a cycle down, we don't even have to say it's a long term, but let's say we're in a down cycle. So the question is, okay, so where can we go from here? Where's the market headed? So in order to give us an idea of where the market could go, we're going to use Fibonacci Retracement, and I'm going to shift to a daily chart to show you some areas or zones where this market could head based on retracement levels on Fibonacci. Now we're going to use Fibonacci retracement levels here to show you potential examples of where this market could go. Fibonacci has been around for a long time, centuries, but it's basically the Fibonacci's levels are sequences of numbers, and basically it's just each number is the sum of the previous two numbers. But anyway, in charting and technical analysis, this Fibonacci sequence numbers are used a lot, and most all of it now is computerized, so it's very simple to use, and you can have these drawing tools pretty much on any platform. So I'm going to switch to a daily chart and show you some retracement levels using the Fibonacci retracement tool that I have on TradeStation. Now first off, I'm going to show you, this is a pivot low from October of last year, 2011, to the high which came right here in October of 2011. So the market just shot up here almost in 1 month. But then I wanted to point out this retracement. So here's a 236 retracement level here, 382. These are Fibonacci, 50%, and 618. Okay, so you can see the market here from the low, pivot high, retrace all the way to 618. So that's a very key number. So watch this. So you take this pivot low, so we're going to go this pivot low, take that drawing tool there, and then go to the pivot high right here, and let's see where it goes. It also retraced to 618. So this sequence, this 618 number, seems to be fairly powerful as far as retracement levels. Markets tend to, they'll either go to the 382 and stop and then rebound, or a lot of times if it's weaker, they'll go to the 618. So here's an example, two examples from a pivot low to pivot high, correction down to 618, pivot low, pivot high, correction down to a 618 on a daily. So now let's go from this pivot low from October. So this, we'll just use October since that's the low we've had for a year, so we can go there. So I'm going to take the drawing tool, take this low down there, take this up to the high where we topped out here in May. Actually this was in April, and you can see now we're coming down to the 382 right here. So the market should get some type of usually a bounce at the 382. So on the SPY that's going to come in about 128.82, close to that area. And you can also be looking at moving averages, but I'm just going through Fibonacci today. So the only thing with this is that, okay, the market, if it bounces here, we could get a rally back up. So we're currently in early May, and the cycles tend to last through July or August. Well, not through July, but the cycles last either through like July or August, to correct me. So that gives another potential 3 months. So this thing could chop up and down, go sideways, or it can continue down. So the more higher probability is that this thing will potentially could get a bounce here at the 382 because the market's getting very oversold. Rally back up to somewhere in this area here, 135, 136, right into here. You get lots of resistance, and then take another move down. And if it does follow the path of going to the 618, then the potential target for the SPY would be right around here, 120.60 to 120. Markets tend to either overshoot to the upside or downside. So potential 618 retracement, the SPY could be headed to 120, so that's another 9 points down. So just to point this out, this is a way you can analyze the market, take the noise out of your trading, just make it very analytical. So good luck trading, and come join us at Options on the Open, and thank you for your time.